Friends, good morning. Vladimir here. This is the daily forecast of February 2015. We are 2 days from the non-farm payrolls, but the way it looked yesterday, the market is already here and already celebrating the rumors that Greece, well, will not be that aggressive with the Eurozone. They will be gentle with their decisions. We saw all the majors, especially the euro dollar and the pound dollar, well, all the majors, flying to the moons. Australian dollar and the New Zealandian dollar was the main two to enjoy. Where all these levels come from? Oh, see how many lines here. Wow. Let's move it. Well, from my point of view personally, if there will be no surprise, it's here to stay. So let's cover several possible opportunities for today. Euro dollar is the first one, and we can see where these lines come from. And the way it looks, the pair is going to make this happen. Okay, so basically there is more to go. And the way it behaved, I think we are now forming some kind of correction and it should continue higher. Watching on a 1 hour chart, it seems that the pair is building this kind of correction. It's 1 hour chart or 30 minutes, 15 minutes, doesn't matter where you place it. So basically that should be the starting from the current level down to here. Okay, that's basically our buy zone. From here, very likely the pair will start to slow down the things and, well, back to bullish. I would say that this kind of a trend line we started to have here should be enough to use as protection. You can see that going like this, right? So basically, slowly going here, protect below it, should be pretty much enough. That should be 113, 80, 85, or even a bit below, just to save the line. And from there, once again, I believe euro dollar is going to get one more push, final push to duplicate the original waves on the 4 hour chart. And after that, well, we will see, because that's going to be a bearish hidden divergence, and we didn't get any bullish divergence to call it to go to secret number 3 resistance, right? Yes, we have 20 candles, right? But the top of the Bollingers could easily use us as final destination. So from my point of view, what's best to be done here is take a small buy on this zone when it stops and completes this correction, rally that a bit, partial cash out on the way, and from there it should be enough and to complete this duplication. After that, and the non-farm payrolls, we will have to stop and see. Same about the pound dollar, which made really impressive move. Now, from my point of view, is going to complete such correction to here, or maybe even a bit lower. And probably what it's trying to do right now is double. So we had 1, 2, 3, 4. After that, we have 1, 2, 3, 4, and from here we could expect it to start and rally back. Watching on a daily chart and the 4 hour chart, the way it behaves now, we should get it duplicating, well, like this, the entire way. So basically, I think the pound dollar will be able this time to rally to above 153. Okay, maybe even more. And I want to remind you, weekly chart is extremely supportive. Daily chart looks good now for this rally, and so do all the other time frames. The only way to switch the minds if this entire range will get break again below its middle, right here somewhere, and then I can call it as a cancelled area. We also can deal with the Pacifics, which also look good, especially now with this convergence been created, and from my point of view there is much more of them to go. Aussie dollar, again, if there will be no surprises, that's the most important thing to do, because the main pressure remains bearish. Okay, but it kind of looks like we are now on some kind of reversal to the top. So from my point of view, we should be able to continue slowly climbing to the upside, cross the 0.79 to the top, reach this resistance, or starting from here up to here. Okay, that's actually goes like that. Okay, so reach this resistance, and again, it's not a specific level, but more like a range, and from there, I believe we will see some or deeper correction down, or turn around and rally once again. Sorry, turn around and drop once again, because the weekly chart and the monthly chart and the daily chart, well, it's clearly they didn't end the drop down. Okay, but the way it looks right now, the chances are for a bullish move, much more than bearish. The only way, if we break down below 0.77 once again, and that's pretty far, then we can say maybe all the bullish view was wrong. Now, one more important thing, remember, in today's non-farm payrolls, that could be game changing, and we know that. Okay, the sensitivity of how the market normally reacts to that could change the entire thing. New Zealandian dollar finally broke this resistance, which it had problem to break last time. Here we go. Right, this time it broke it up, managed to hold, and beautiful retrace, spiking that and continuing higher. So buy dips still was and still is the plan for this pair. The way it looks right now, this small correction we will get here probably should take us for continuation. Personally, I will not be surprised if we will go all the way to 0.76, which would be, sorry, a bit above the daily 20 EMA, so it's like 0.7550 up to 0.76, the next resistance as well here. Okay, and after that we will have to stop and see. So as for now, my plan very clear. Okay, nothing complicated. Correction or pattern, whatever it choose to move, and then continuation, while this area now holds as our support. Right. Dollar yen is a bit tricky. Well, this zigzag here started to be a bit not clear from my point of view. So as for now, I prefer to avoid this pair. I still remain bearish in my mind. I'm not quite convinced and sure about the setup at least at this stage. So I would be careful dealing with this one. And dollar Canadian, well, dramatical movement, I would say. But my main view remains bearish. I think every correction we will get to here, somewhere like to here up to here, should provide us very nice sell opportunity as for continuation. And according to weekly chart and daily chart combinations, after this small retrace, which likely to find a way to happen, we will get continuation. 122, 121, maybe even 120 are definitely the targets for this pair. For those of you who are in invest mode, remember we suggested like to start the investment with the first red candle after this crazy highs, and we got it right here. So it should be fine, and hold it, let it go at least to the 20 EMA, very likely, and to the opposite Bollinger Band. Now, few more interesting pairs. The Pacific crosses. That's the pound Kiwi, very, very massive. I don't think this down move ended. I think we are going to deeper correction. So right now probably some kind of correction reaction here. After that, one more drop, somewhere in between 203 down to 2. That's where I think it's about to stop, and from there we could definitely start looking to buy. It's a bit early now, but we should keep this plan in mind. It could start to be relevant any moment. Okay? And that's basically for everywhere. It's like Euro Kiwi, same idea. Euro Aussie, same idea. Pound Aussie, same idea. They go pretty much hand by hand right now. Okay, so for Euro Aussie, that's what we got right now, a pretty clear channel, right? So if we got one more same size, like now correction, then continuation, back to this place, from here we'll probably start look for buy opportunities once again. Okay, but again, basically nothing new. You can see it's related clearly to the Pacific's plan we had before, so that's basically all. And the oil, well, what a beautiful move there, right? It looks good, it behaves good, and if there will be no change, we should get now correction, probably back to 50 or 49 or even 48, which after we will see one more rally with very big probability for that. So what I want from the oil to do right now is actually make something like that. It might start to create some kind of correction as a pattern here, okay? Flag or range or whatever it is, okay? Which after, I believe it will stop and continue all the way up once again. I would say this time at least to 55, maybe even attempt to get closer to 60. So basically that's all for today. Remember, keep the risk small. We are very close to non-farm payrolls and we don't need to take over risk here. And last reminder, euro pound, we want this pair to cross the 0.76. Remember, we needed to cross up to 0.76, reach a bit more, and after that we will be looking to start and join the sellers. Remember, we have the trend line. Okay, so after it reaches this level, we will be looking to join with the breakdown. Okay, because very likely there is more to go. So that's all for now. Thank you for watching. Wish you a wonderful day. I'll see you again tomorrow. Yours, Vladimir.